Okay, guys. So I'm just gonna go over my trade that I'm currently in. US oil and AUDCHF, these two bottom charts here. So I can go over US oil real quick, but um, yeah, right now it's not really doing much, right? So I could get stopped out here. I mean, this is initially my stop loss that I was looking at, but I decided to kind of give it a little bit of room to breathe a little bit. I think I'm gonna be a little bit more open to just kind of accept it at this area instead, which is my initial stop loss. But I was initially looking at this, but I just wanted to see how it reacted from that level. And right now, to be honest, there's really not much happening. Um, So yeah, I'm just gonna have to see what happens from here. But I want to just give it some room, just give it some room. This is a kind of a bit of a short to medium term type play. I'm willing to kind of let this go, but of course, anything can really move this particular asset, right? Obviously, the bigger run here was caused by the fact that there were two missiles that was reportedly shot by Iran to U.S. warships, which was later denied by CENTCOM. But then UAE came back to say that there was actually a warning shot to one of the ships. So there is, as there's been this back and forth, basically, right? There's a lot of this back and forth, and yeah, like I said, we don't know who's really telling the truth, who's not. But what we do know is that there is a clear. Now it's not about the supply risk. I mean, we know that there's a supply risk here, obviously, right? Which then is what's causing this, that's what's causing price of oil to kind of move, right? Markets are pricing in a higher risk premium, obviously, but it's not really just about that. It's about how long this can last, right? It's the disruption because the longer it is, the more inflationary yields are gonna go up, inflation's gonna go up, right? Interest rates are gonna go up. Global economies, global countries, they're gonna come in, right? Central banks are gonna come in and they're gonna increase interest rates, which would then cause a lot of volatility in the market. And so it's simple supply and demand, right? I mean, if Strait of Hormuz is still blocked and there's no resolution, then there's a very good chance that the price of oil can actually start to move. Now, of course, anything can happen. It could absolutely take me out. It could be priced in. I might go in a little bit too early. It might happen after, whatever. But for now, that's what it is. And of course, the worst case scenario is that if there is an actual resolution, then this trade is just going to dump real quick. Okay. So there is some risk on the table, but as of now, I mean, my assumption would be I don't think it's gonna happen anytime soon. I mean, it seems like now they're actually they're actually sort of firing missiles at this point, right? So it's a little bit different from the early April when things were a little bit more not say calmer, but it was just word of mouth. Right now, we're actually getting attacked. So I don't think that's just gonna end. I think my guess is eventually it'll kind of be normalized, which is not great, obviously, but that's just kind of what's happening right now. Um, and yeah, so that's the idea we have on US oil. Now on EUDCHF, I mean, we'll start with the macro. Overall, the macro has been rather bullish. Um, we're kind of updating here, but most of the things are right here. We have a bullish score on the economic growth side, job market, nothing really going on. Inflation, we have we have obviously, a hike today on the RBA, so 4.35%, 25 basis point increase. Sentiment's bullish. We have an increase in COT data, institutional data, right, which we can take a look here. Latest COT report. So this was on the May 1st, so a little bit lagging, but it's okay. It gives you an idea of what institutions have been looking at so far. What we can see is we get a bullish net positioning, right? We have a significant increase in longs contracts, right? And these are basically the COT data is basically produced by the CFTC, and these are essentially hedge funds, buy-side institutions basically, and institutions as a whole that are actually these are actually institutional positions, right? And more or less they are usually right. And what we can see is that they actually increased their long contracts. They also did increase their short contracts, but quite minimally as compared to the longs. And if we look at CHF, and this was obviously all because of what they expect in the pricing. I think they're really. I think that, to be honest with you, I think the rate idea before it was actually hiked has been already priced in. So I mean, this trade can definitely turn against me. But might be too late. Maybe, it's kind of a sell the news kind of situation. But when I saw this increase or this little nice bounce right here after we have been just consolidating, right? And we had an initial sell-off, but now we're kind of pushing up a little bit, so it might seem like we might continue higher here. We'll see. But definitely more, interest rate divergence is huge there. You can see CHF as the opposite of AUD right now in the sense that we're actually getting a strong decrease in long contracts, right? With a little increase in short contract. With a little decrease in short contracts, but a lot of longs got out of the market. You got to understand CHF is at 0% interest rate right now. I believe the inflation also met forecast, so it's kind of just doing nothing at this point. It's nothing crazy. It's not nothing significant, and they're looking to intervene to actually, if I'm not wrong, they're looking to intervene. Let me try to get yeah, they're looking to intervene for excessive Swiss franc appreciation, right? To sort of control, sort of limit the bullish case for CHF, right? Because if the franc actually strengthens too fast, right? So yeah, I mean, the only thing that I got to be careful about here is, in a sense, both of these trades could conflict against each other. In a sense of if it depends on how because right now everything is all around the Middle East, Iran and US straight up Hamas situation. Okay, that's the market's kind of still kind of over that, kind of going through that to kind of price what they expect in terms of volatility. And um, if there is an escalation, okay, then there's a good chance that, yeah, obviously my oil trade will move well, but I think risk on assets will be affected. So oil will be affected. I think obviously AUD is a risk currency, will be affected as well, and there's going to be a little bit more safe haven demand. So USD, CHF, things like that will start to move. So that could affect the AUD trade. However, if there's not, no real serious, so I'm talking about escalation, like they're literally fighting each other at this point, right? They're really like they're like bombing each other. Ships are being like blown apart. Like, I mean, God forbid, but things like that. Some serious situation, not just word of mouth, right? Like real, like solid, like situations that are actually happening and there's proof of that as well. Like then that's what I'm talking about in terms of escalation. Okay. However, if it's more so in a sense of more so in a sense of like if all just sort of remains kind of strong bid just because of the duration of the supply risk, then that can benefit as because right now equities is at all-time highs. There's still hawkishness for the AUD. There's overall stable risk sentiment, then overall I think both can move in tandem, right? But if there's a crazy escalation, then risk on assets are definitely going to get affected. So that's the risk, lah. But that's the risk basically, okay? So I hope that makes sense. Something I like to use as well on the Edge Finder is economic surprise index, which basically just showcases based on this media, it's just showing what are the indicators that have, what are the currencies that basically beat forecast, right? And so what we can see is AUD has been beating forecasts, beating expectations pretty well here. CHF is kind of, in between. So strong bullish case here. I think long-term wise, AUD is kind of neutral for the most part. But yeah, I mean, I'm not really trading too long of an idea. So overall, still positive. A lot of bullish case here for AUD. Strong bullish case here, as you can see. Just been beating forecasts, right? From GDP, manufacturing PMI services, retail, CPI, PPI. Unemployment's kind of been neutral. And we go to CHF. I don't think it's doing too crazy. It's kind of in between, right? But like I said, I think this play here is going to be really strongly about the interest rate divergence play, and the overall comparison between comparative analysis between both macroeconomic data. So yeah, so it's kind of just a mix of the central bank tone, macroeconomic data, economic releases, and also kind of overall the state of the war, right? So yeah, I'm probably gonna hold this depending on how fast it's gonna move, but UDCHF usually moves pretty slow, so I'm just gonna let this do its thing. Targets wise, okay, so for US oil, I'm gonna be aiming these highs, essentially this area of resistance. That's kind of where I'm looking at. And AUDCHF, I'm aiming for that weekly high. So if we go to the weekly area, this is actually a weekly area of supply. So I am looking to potentially get my position within that, maybe that, excuse me, maybe at this resistance area. So we will see how it plays out. But yeah, overall, seems pretty interesting. I mean, based on the volume profile as well, we have actually kind of taken out the value area, the point of control, and we're almost tapping into that value area low. So we're actually at pretty discount pricing right now, pretty good discount pricing based on this leg. Yeah. And we also are in that 61.8 range. Of course, anything can happen at this point. It can definitely go a lot lower, which I've also kind of anticipated. If that does happen, then I'll be looking for longs around this area to for potential continuation. Um, yeah, so kind of two ideas here, but I'm now in the first idea, and we'll see how it goes. We'll see how it goes in this trade. So, all right, thanks for watching, guys. Cheers.